Hey, this is Matt from InvestiQuant. Today is Wednesday, April 28th, 2021, and today is the day of the FOMC announcement. That'll be out today at 2 p.m. Eastern Time, and we are going to look at what has happened on this day historically based on a similar opening location in a similar market environment. So currently we are trading higher in the overnight session. However, I'll tell you, we're not up significantly, and this one has a different bias depending on where you open at. So it's kind of important that you rerun this one once you get closer to the open to know exactly where you're going to be at to be able to apply it to today's session. But since I don't know where we're going to open at for sure, I'm just going to go with where we're trading at right now, which is up. So let me go ahead and set up this study with all four instruments. The setup's based upon entering the market long at 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. Now, we're currently trading higher in the overnight session, so I'm going to use gap up as the gap direction here. We are in a bull market environment. We're above a 10, above a 200-day simple moving average, and today is the FOMC announcement. So the market events section here, I can grab the FOMC announcements from market events right here, or from the active today section. It's available there as well in the market events. Now I can click view results. And here we go. These are the results based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, when the market opens higher on the day of the FOMC announcement in a bull market environment. Now, historically, we've got 44 samples in the S&P, 49 in the NASDAQ, 39 in the Dow, and 39 in the Russell. And the win rates on these, if you look at the S&P, it is by far the weakest of the group at 34%. So pretty weak day historically with this gap up on the FOMC announcement in a bull market environment. The NASDAQ coming in at 53%, so not nearly as bad as the ES is there. The Dow just a touch weak at 46%, and the Russell 49%. So it's really just the S&P that has been weak here historically. And if we look at the average win, average loss on those, the average loss is larger than the average win there in the S&P. Very similar in size for the NASDAQ, and then the average loss is larger in the Dow and in the Russell. So 3 of the 4 have larger average losses compared to their average wins, and then the NASDAQ is pretty much the same. And then 3 of the 4 win rates are just under 50%, NASDAQ just over. So the win rates are not as indicative here across all 4. It's just the S&P that has a weak win rate, but 3 of the 4 have larger moves to the downside as well. Now, like I said, this pattern really depends on where you are opening, and right now we are currently trading up. If we were to trade down, if I was to change this to a gap down, the bias would change. And, you know, also with that being in mind and the type of day that you often get on the FOMC announcement, it's often a good day to think about mean reversion like trades early on in the day. You can test that sort of stuff here in Discover. Let me just show you one real quick. We're going to take the same setup here, and we're going to change it to a gap fade. So to do that, I'm going to come in here, and I'm going to click on fade from the trade type. And a fade, when you are gapping up like I currently have this set up as, is going to mean it is a short trade at the open. Now next I'm going to go into the exit. I'm going to change the end of day stop and target to a target of the prior session close. So that is 41.7875 in the ES. But that's looking at the 415 price is what this target is going to be targeting here for what we call a gap fade setup here. And then I'm going to add a stop to it. You can pick whatever you want, but I'm just going to pick a 40% of the 5-day ATR as a stop. And for reference, 40% of the 5-day ATR right now is about 16 points in the ES. The 5-day ATR there is about 40 points. And then lastly, I'm going to make this a little bit more specific to the open because I want to get rid of any gaps that may be flat, meaning you're opening right at the prior day close. And if that's the case, then it would just count as a win in the back test and not really be anything that's tradable. So I'm going to say that the gap size is at least 5% of the 5-day ATR. So minimum today, that would be a minimum gap size of at least 2 points or so. But that will set up this gap fade, and now I can hit view results. And here you go. These are the results of fading an up gap of at least 5% of the 5-day ATR. When in a bullish market environment on the day of the FOMC announcement. So you can see the results got quite favorable here for the S&P. The win rate on this has jumped up to 85%, and this is targeting the prior day close. So this is just an intraday like trade setup. But the S&P 85% there, NASDAQ 75%, the Dow 74%, and Russell 72%. So all of them pretty favorable win rates. They don't all have the same profitability, but you can see the S&P is fairly profitable on that little trade idea there. But, that's using a 40% stop. 40% may not be your cup of tea for trading, but bottom line is it has historically been an environment where you can trade back towards the opening gap in this setup, and you can get creative with your own stop and maybe lean on your own support and resistance without having to just use a mechanical stop to be exactly like this. But bottom line is it's been a favorable environment for those types of setups as well. So hopefully you found this helpful. Good luck today. We'll see you next time.